Today we're going to be talking about building your financial future. We're going to be covering topics like assets, net worth, and so much more with their friends over at Bank of Hope. We have Lisa Hill that's going to be helping us today cover this amazing topic. Very important that you watch, share with your friends and family, and leave any questions in the comment section below. Enjoy this workshop.
Hello, my name is Lisa Hill. I am the Vice President and Community Development Officer at Bank of Hope. My responsibilities are providing Bank of Hope with CRA opportunities in investment, lending, and community service in the assessment areas of California and Washington. So I want to thank you so much for letting me present to you Money Smart training on building your financial future. We want to get into the first section here about discussing what are assets and why are assets beneficial. So the key takeaway on this first section is assets can lead to wealth and financial security. So what is an asset? An asset is something that you own that has value. For something to be an asset, you need to own it or control it or to be able to make a decision about it. Now, the financial asset that I want to talk about is cash money, the money in your savings and checking account. And then also stocks and bonds are considered the financial asset. The third type of asset is called a productive asset. This is not a physical asset, but it is important to building upon your assets. When owning assets, it creates a buffer. And this is important because that buffer will help you and your family handle emergency and hardships. So it can reduce the stress time that if you lose a job or if you get reduction in hours, at least you'll have a cushion to rely on in your assets and your values that help you at that time that life gets in the way, and we need to prepare for that. And in order for us to prepare for that, we got to increase our assets. So the takeaway from this section is assets can lead to wealth and financial security. The second section is how assets create a financial foundation. So we want to discuss what assets, liabilities, and equity, and then your net worth is all about. The key takeaway here is that your net worth is a good measure of your financial stability. So we're looking at how to calculate your net worth, and that is by subtracting your liabilities, which is what you owe, from your assets, which gives you that net worth. Now, let's break it down in understanding what the asset is about. So to understand how assets create wealth, you need to understand the assets relating to liability and equity. So an asset is something that you own that has value. And to get that asset, you need you can borrow that asset, borrow to create that asset. We're going to talk about, how you need you have your own down payment on a home, but then when you have to borrow the rest of the loan or the value of the home, so you would borrow from the bank or, friends or institution. Mostly you're going to borrow from a bank on the rest of your pay, on the loan value of the house. So that's how you create your assets in that. And so based on looking at this scenario where you have the value of your assets minus the liability equals equity. And us lenders like to call it net worth. So your equity is based on subtracting your assets from your liabilities gives you that equity. Again, just reiterating that the equity that you have is also your net worth, and that's the measure of your financial wealth. So it's important that you try not to have as much liability as possible. But, things do happen. It will happen at any time that your liabilities may be higher than your assets, but there are ways to grow your assets, and also a way to decrease those liabilities. And we're going to talk about that later on. So there's different net worth, and I wanted to go over those. So the first one is that we want to create a positive net worth, and that's what is called a financial cushion. That is what is left over from you subtracting your assets from your liabilities, gives you your net worth. And that cushion could be the emergency fund that you can use, and gives you the peace of mind that, hey, I have a net worth of 100,000, or maybe $100 could be your net worth, but at least you have a positive net worth. Then we go into different other ones, which are the zero net worth, which means your assets minus your liabilities equals zero, meaning you don't have any cushion at any time, and they're just balancing out, creating a zero sum. And then also when you're looking at having a higher liability minus the assets, which are lower, will create a negative net worth. And that means you don't have a cushion at all and that you still owe money on that debt. So it's important to have a positive net worth. I wanted to go over this scenario with you. It's talking about Justine's net worth. So we're looking at this, and I wanted to break this down to you on Justine's assets. So looking at her assets, she has $2,000 in her checking account. She also has $2,000 worth in resellable value on her truck. We're also looking at her house, and for the market value, it's worth $130,000. She also has personal possessions of jewelry, antiques, and furniture, estimating a value of $7,000, which gives her a total asset of $141,000. Then we're looking at Justine's liability, which is $1,000. She owes to the bank on her mortgage $100,000, and her vehicle loan, her truck loan, is $3,000, and she has a student loan of $15,000 that she owes. So altogether, her liabilities add up to $119,000. So we're taking her assets, which is $141,000, and then we're looking at the total of her liabilities at $119,000. Minusing those two gives her a net worth or equity value of $22,000. So she's $22,000 in the positive. So here are ways that you can increase your net worth. It's first of all, looking at your budget, being able to spend less. And with that budget, you're saving more money, which you can actually put into a emergency fund, your savings account. It can be anywhere from $5 to $20 and up. But it's important to start somewhere in saving that extra money from your budget and being responsible in making sure that you pay down your debt or keep it at a low balance, because you don't want to have your liabilities be more than your assets, because you want your assets to work for you whenever an emergency happens, or in case it keeps you in a peace of mind, stress less, and also know that you have a cushion at any time that something may happen. In this section 3, we're going to talk about how cars as an asset, and it's really considered a productive asset when you're looking at a car or getting a car. So the key takeaway here is a car can be a productive asset when it helps you to get other assets. You need to plan ahead to get a car you can afford with little debt as possible. So having a safe and reliable transportation is important because it's part of financial security. And also the key part of an asset building strategy for many people is having a car. So here's tips on getting a car loan. Again, the first thing that you need to do is make sure that you check with the 3 credit bureau agencies, which is Equifax, Experian, and Transamerica. Make sure that you order those credit reports, and you can do it on an annual basis for free, and you can go to annualcreditreport.com. Pull that to make sure that there are no errors, or if there are mistakes or late fees and everything. So that way you're not caught off guard when you go in to talk to the lender about a loan on a car or getting pre-approved for a loan, that you know what's going on in your credit. And that way, if there is a problem, you can explain, or you know what the situation is, and you can give a letter of explanation to the lender to consider you for that pre-approval on a loan. It's also important that before you go into a dealership, now I do this all the time, I make sure that I'm pre-approved for that loan, because I'm not really good at negotiating. I don't know about you. There are people with a great skill of negotiating whenever they go into a dealership, but I'm not. So I just make sure that I know how much I can afford. I'll be able to show them, hey, I got pre-approval. I don't need to go any further of talking about adding this or doing that, or, to my car. This is how much I can afford. And here you go. So it's important to kind of walk in there with a pre-approval, and it makes the dealership and negotiations go a lot smoother. The third thing I wanted to say was shopping around. It's important to shop and compare interest rates to lenders, because sometimes lenders do have really good interest rates, and it also depends on your credit and your credit score. So when you look at their credit score, your credit scores are up. They also can determine your interest rate and your term based on your scoring on the credit report. So that way you have the opportunity to know what's out there when you shop around. And then also shopping around on cars. Sometimes there are better prices on cars out there than going to the first dealership that you see. So it's important to keep record of all the loan quotes that you get, and also looking at the different prices on cars. And the final thing is make sure not to leave the car dealership with a car without finalizing your loan. So the takeaway is that the car can be the productive asset that will help you get other assets. And you need to plan ahead for the car in making sure your credit's good, making sure that you know what the expenses are behind the car, and all of that we discussed before, and having a pre-approval and not leaving the car lot without having the loan finalized. Those type of things. If you plan ahead in order to get the car, then you will have to afford a little debt as possible on that car. We want to talk about training and education as an asset. So I wanted to explore this with you on considering what this means in getting paid training and education. So the takeaway here is that training and education can be a productive asset, just like the car. And this means that it gives you a stronger chance of securing a better career and also a high-paying job. So we need to also think ahead on making sure that we have little debt as possible when taking on training and education. The types of educational experiences with institutes are you're looking at on-the-job training, apprenticeship. There are also vocational schools, technical schools that are around. You're looking at community colleges, 4 years, and the military, and also job corps. Also, when talking about school and education, it's always important to actually compare and do research on all the schools or the training program that you're looking at, because you want to see how much it's going to cost you, and seeing if you can afford it on your budget, and talking it over with family is very important to let them know this is what you want to pursue, this is how much it's going to cost, but I can also be able to get a better career or a higher paying job. And even on your job, if they offer you, hey, if you can get your education, you can get promoted to the next level, then that's an option that you can kind of consider with you and your family in looking into the cost of the education while you're attending school. So the key takeaway is training and education can be a productive asset when you give a strong chance of securing a better career and also a high-paying job. And plan ahead so that you have as little debt as possible. I want to thank you for giving me this opportunity to bringing Build Your Financial Future here to you. I look forward to other workshops with you.
Wow, that was a really great workshop. Thank you to Lisa Hill from Bank of Hope for covering this topic, a very important topic. I think out of all of this, something that's really sticks to me the most, whenever I hear talking about net worth. A lot of people like to say, I make $100,000, $200,000 a year. But what I always ask people is, how much do you have left over? What's your net worth? What are your assets minus liabilities? And what do you have left over? You'd be surprised. A lot of people that even make a lot of money tend to not have much money saved or not much money invested. At the end of the day, it's not about how much money you make, although it's important to make good income, but how much is left over at the end of the year Someone that makes 100,000 and only saves 1,000 is not wealthy compared to someone that only makes 50,000 but saves half their income, 25,000. They're gonna be in a much better place even though they make half the income. Crazy to think, right? So make sure to save your money, invest it, and be a good steward of the money that you have. That way you could build your net worth. Please be sure to subscribe, like this channel, follow us on Facebook, YouTube, and Instagram for more similar related topics. Thank you and take care.